Wagwan my people. So I'm gonna make this a quick one take video explaining this setup though. This setup has made me bags from gold. Like this is the setup that I use to scale small accounts. I've recently posted a video talking about how I'm able to trade small accounts into large sizes using proper risk management and using scalp and sniper entries. So today I'm going to show you one of the setups that actually present themselves. This setup literally shows up almost every single trend in gold, and it's never failed me. Every time I see it now, I literally just know when to unload and just go crazy with the setup. So yeah, this week so far I deposited actually a £9 account. I don't know if I showed it in the last video, but so far I took the last trade yesterday, and so far we up 146 on the £9 account, guys. I mean, £9 to £146. I would say that's quite a decent return, and this is not from full margining or anything like that. Now, excuse the noise, guys. I'm at a cafe and they might be hella loud, but I got some snacks too. But yeah, like it's quite a decent return so far on a £9 account. And the setups that I take are like quite decent setups. As you can see, like there's very little red going on there. Like it's very rare that I take a L, and when I do, it's quite a big L, but like it's still in the margins of like what I intended to risk for the day. Now, I wouldn't say I'm exclusively a gold trader, but truth is, facts are, gold has literally been sorting me out, bro. Every single setup I take on gold, and it's kind of the only pair I've been trading so far. Like any other instrument that I try to trade recently, because I look at gold so much, it just doesn't make sense. So I've just decided to stick to what I know most, which is gold. So yeah, I guess I'm a gold trader now. But yeah, man, this setup, I don't know if I'm gonna do a whole screen sharing thing because that's gonna be mission. So I'm gonna try to actually flip the camera and like explain it to you guys. Let me show y'all. I don't know if the camera is clear, but you can probably, now you can see quite perfectly. Yeah. Hold on. I'll zoom it in properly. Yeah. There we go. There we go. There we go. So, with this setup, guys, it's so repetitive. Like, it is so repetitive. You see it happen time and time and again, especially on a trending market. Especially on a trending market. It only works on a trending market. So what you want to do is come to the 5 minutes. You get an obvious read of the trend, right? Obviously, it's a bullish trend. We've been bullish, and it's steady bullish. But the key to getting this set up properly is looking at the 1 minute chart. Like that's primarily where you're gonna get the snapper entry with very little drawdown, and you're able to just hold it down to the next high, which is the next draw on liquidity, right? So yeah, let me break it down. Yeah. So usually when market retraces over here after a big move to the upside, after this big move here to the upside, market likes to retrace a little bit. Whenever you see this retracement, expect some consolidation over here. This very consolidation here is gonna be a pre signal to indicate to you that hey, the setup is about to present itself. So usually what you want to look for is some type of unmitigated price here, which is a proper fair value gap. So this is also a signal. It's signaling and telling you that hey, we have more reason to go up, right? So this fair value gap here tells you, especially on the 1 minute, yes, people will say if 1 minute fair value gap is not it doesn't hold enough evidence, or I mean grounds for price to react, right? It's not very significant because it's on a 1 minute time frame. But this one is very valid because you in line with the overall trend. So if there's a 1 minute fair value gap, consider it. Consider it. I'm not saying base your whole trading on it, but consider it, okay? Because this is compounded with like combined with a bunch of other things for the setup to make sense. So what happens is market is extremely bullish, it's trending, it's trending, it's trending. This works the same way in a bearish setup, by the way. So market will retrace a little bit and then you wait. It will sweep a low here. A lot of people will think, okay, the market is about to reverse. What you should do is wait patiently. You wait for it to consolidate. This is a perfect indicator that the setup is about to present itself. So this little consolidation here forms liquidity above here in these zones that I'm putting the green arrow at. Wait, that's not a green arrow. Here. I usually like to mark liquidity with these arrows. So I hope the camera is clear enough. But yeah, this resistance over here, shows that okay, we have some liquidity resting here that's gonna need to get swept. So market would usually consolidate down here, and then people start selling off from here. These support and resistance traders will see, okay, hey, this level is holding up, so what are we gonna do? We're gonna sell some more. Cool. They will sell down against the trend, which is something you shouldn't do. But yeah, they'll sell down. But you know that this is the actual liquidity that the market is trying to target, because we are in a what? In a bullish trend. So you know the market wants to go higher, and it will obviously take out bottom liquidity before it goes up. So what you do is, you see here, people think here, okay, market's broken down to form the lower high. Boom, we broke structure. People are thinking, okay, this is a straight up sell setup, but it's not. So market will come down here and break. You don't just enter there yet. You don't enter yet. You wait for market to break down here, because look, it is looking very bearish right now, but you need the last signal to confirm to you that, hey, this is actually a bullish market, this is actually a bullish setup, and it's a clean one with very little drawdown. So what you would do is, when price is here, everybody who sold from here is thinking they're in profit. Cool. Maybe they are in profit, maybe they took their setup, great. But you're gonna wait for market to come back up after sweeping this liquidity, because there will be a reaction from here. After all the liquidity has been taken here, market has more juice to go up. So market did eventually go up, and I actually did take this trade today, but I didn't hold it for that long. It came out around here. Market will come up, and then we have a break of structure to the upside, and this is your signal. This tells you, okay, yes, we still have pressure to the upside, and this also forms the last tip point of more liquidity to even go higher. So this forms some more resistance, bro. So here we have 3 points of liquidity, we have 3 touches of resistance. So this is more confirmation that this trade setup is valid, and the market will pull back after that. Once you get that little pullback, you are literally valid for an entry at any point over here between the zone, between these 2 zones over here. This would be a valid entry. So I took my setup over here for longs. I put my stop here below the fair value gap in case it plummets down and does an inverted reaction. Then okay, we come out with only a little bit of profit. I mean, only a small loss, but I entered right here, very little drawdown. Price was already in profit within like the next 3 minutes. And excuse me, usually I would target here. This is what you should do, but I came out a bit early today because I couldn't be on the chart for long, and it was a bit of a risky position, so I risked way more than I was supposed to. It happens. But yeah, the setup was perfectly valid, and as you can see, price will go nicely. See this little fair value gap here? You see how the market respects almost everything. Even at this fair value gap, you would see that, okay, it's still gonna react to it. That's why I said you should keep it in mind. This fair value gap was still reacted from. Still reacted from, bro. Still came down. It respects market structure, okay? But yeah, I entered, and then you would basically just hold it up until the next strong liquidity, especially when the trend is this strong and this intense. You know that you're gonna go hit TP, and what happens? Market goes, forms highs, and then boom, takes out there, and you would hit a decent risk to reward. You would hit a fire risk to reward, like 1 to 6. I mean, look at this, bro. That's an A plus setup. Yeah, that's basically the breakdown of the trade. And seeing that the account is so small, if I were to risk, this is exactly how I start the accounts. Like when you at the £10 point, whether the balance is at 10 point, it's very likely to blow the account. It's very easy to blow it, but you have to be strategic with it to make sure that you make the most of the first trade. Like the first trade really matters. So the first trade would be something I would wait for. I usually take the setup as like a first trade, and it comes up very often, bro. It's literally retracement, form consolidation, more liquidity, wait for it to sweep, break a structure down, and then up again to break the next strong liquidity. So yeah, this trade alone, let's say I have a £10 account, and people ask me like, bro, how are you able to scale it that high with such a small balance? Risk to reward, good quality setups. So yeah, that's literally how I go about it. And if I have a £10 account, on this trade I would risk £5. The whole half, 50% of the account, I'll risk it because look, if it blows, I have another £5 to find another decent setup. So I would literally put there, and then it's a 1 to 6. TP will hit at 30. Come on, bro. That's already now the account will be at £40 after this one setup, and then after I'm at the £40, I can get more comfortable with risking more, but still not trying like to take myself back into the 20 region or anything like that. But yeah, that's just a quick breakdown, boys. Hope some of you find some value in this. If you found anything interesting so far, hit the like and subscribe button. And yeah, see you on the next one. I'm thinking of doing this more often. I know I've been saying that, but man's busy, bruh.